Hi everyone, hope you're all doing well. Today I'm going to do a video on one of the UK dividend stocks that offers a very good yield. It actually featured in yesterday's video a fantastic dividend yield, and the other thing as well is financially it's performing very well, and you could argue as well on the share price it is set up to have a very good return on the share price, and that's a great thing. A very high dividend yield. Also, that dividend yield is probably going to get hiked up and the dividend is going to be raised because financially the company is performing so well. And also, the share price is so beaten down for a company doing so well, and there could be also share price appreciation, and that is a very good combination. So, as you guys remember, it was mentioned yesterday, the stock is Cakebox. Now, you can see here today it's having a pretty good day. The stock is up 6%. And yesterday as well, it had a pretty good day, although it ended up giving most of it back as the day went on, which was the crazy thing. As you can see here, after it had a bit of a jump here, the stock was up 11%. It then gave about 5% of it back, and then today, some of the rally is starting to happen back in the stock, but it's still not up as much as what it should be. That's a crazy thing. So Cakebox, currently 11 times earnings, is a 5.5% dividend yield. If it wasn't for that jump that we had, it would have been closer to a 6% dividend yield, which is very, very attractive. But even at 5%, that's not too bad, and also that's not factoring in the new dividend increase it's just done, which we will point out in a second, so that will obviously increase. But yesterday it brought out its full year accounts, and it was very good to hear that the CEO was talking about it's basically our 5-year anniversary from being a public company, and from that time he talked about the success and the expansion that the business has had. And I thought, it's so true. We'll talk about the success that it's had in a second, but I then thought about all this progress that we were talking about, the financial progress, and yet you look at the company, and the company came on the market at £1.37, and even though it had this sharp rally up at this time frame where the stocks did rise up, you then look at where it is now and it's £1.34. Like, from 5 years ago, the share price has done nothing. The share price has done absolutely nothing. And yet when I was listening to the CEO talk about all the progress they've made in that time from the IPO, I was like, this is so true. Like, the share price does not make sense at all when you look at the progress this company has made. And I was listening to the financial performance of the business over the last 5 years, and I'll use Simple Wall Street really quickly to show that rather than me speak it, so you can get to see it in a better light. And a lot of people ask me about this platform. It's Simple Wall Street. Joining through the link in the description, and you also get 40% off your yearly subscription as well. And you can see here, like, the IPO time where the company was 1.6 million in profit, 8.6 million in revenue, and just look at how successful the business has been. The company is now 4.2 million in profit. The profitability is nearly quadrupled, and from that time frame, 8 million in revenue, the company is now doing 34 million in revenue as well. So from that time frame, you're talking about a company that has once again nearly 4 times the revenue from that time frame. So this company has so much expansion and great financial results in the last 5 years. And you're looking at where the share price is, and it's like, it hasn't moved, and it just is crazy to look at that. Now, getting on to Cakebox, by the way, Paul Hill actually did an interview, a Q&A session with the Cakebox CEO and CFO, so do go there to check that out. It's around 15 minutes long, which is definitely worth watching. I thought I'd shout that one out as well. But let's do the full year results that came out yesterday. So, this is for the 12 months ending 31st of March 23, so it's the key to say that time period, that 12 months that these results are in, was in a very tough environment. You remember that environment of those 12 months. You had inflationary pressures, you had all the costs going up, shipping costs going up, the energy crisis, the Ukraine-Russia situation, you had Liz Truss coming in and absolutely destroying the economy in 12 weeks. So it was a tough year in 2022. And I think it's always really important to take into context that year. And when you then look at the results, revenue up 5.6%. This is very, very good, because there was a little blip they had in them year results where there was a little bit of a slower revenue period during the summer months where there was a heat wave, a lot of people went travelling, all them costs and the spending squeeze were going. There was a time where there was a little bit of weakness going on in Cakebox, and they still pulled out these results as they sorted that little blip out, and 5.6% revenue growth. Really, really good. Like, I always thought Cakebox, for a company at this sort of valuation and paying this dividend yield, I always thought about 4% revenue growth. The fact that they've actually done 5.6 revenue growth in this year with everything that's going on, is very, very good, and actually gives me confidence that my target of 4% revenue growth is very, very sandbagged. So that is fantastic. Gross profit up 8.5%, higher than revenue growth. That is so impressive. You know, you talk about the amount of businesses, especially companies that sell physical products, and obviously Cakebox sells eggless cakes. With the raw materials going up sky high and the energy situation, to have gross profit not only up, but actually higher than revenue is so impressive. And I actually wanted to hear a little bit more about the commentary around the gross profit, because my feeling is that if they've increased this 8.5% in this environment, like imagine now when we're seeing everything starting to shoot down, all the costs, all the products, all the input costs, you know, the likes of the energy and the raw materials that go into the, I never said eggs there, but obviously it's eggless cakes. You know, all them costs that are coming down, surely we're only going to see gross margins expansion going forward as well. I'd love to hear some commentary on that. Now, EBITDA was down 24%, but cash was up 11.9%. Now, the reason why, we'll get onto that in a second, why the EBITDA was down, it was investment back into the company, which I'm totally fine about, because you want to keep, if you're going to scale, you need to make them investments in the company. So I'm fine with that when you look at the reasoning behind it. Final dividend, like I said, you know, we talked about the dividend yield dropping because the share price has gone up, but at the same time, that's not factoring the final dividend recommendation has increased by 5.8% as well, and obviously that's because the revenue keeps increasing, profit keeps increasing, they'll keep increasing that dividend, which is obviously a beautiful thing to have. 4.1% great growth in online sales, that's obviously really good, especially when you look at the boom from the CV situation, still be growing that. 20 new franchise stores open, 205 stores in the operation. Further expansion of supermarket kiosk offerings now with 18 supermarkets. I'm hoping that increase this more and more, and I'm hoping that increase the amount of smaller stores. They have the franchise stores and the big stores, and now they're moving into the supermarkets, which looks a really good expansion. But I'd also love them to have these little mini stores that I've seen before. They've had them in the Arndale Centre in Manchester. They've had it in the Trafford Centre in Manchester as well. These little stores, they're always really busy. People queuing for the cakes. That's, you know, I'm sure that overheads on them are quite small. And also the money they make on them is really good. I would really love them to keep expanding that. Now, like-for-like sales was a little bit weak, 1% in franchise stores, and that is a weakness that we talked about that was shown. And if we can see the rebound in that, that's obviously going to be really good for next year's result. And this is where it's actually really good, because they did a current trading update as well. And he said the board is optimistic about the prospects for the year, and sales performance continue to be robust, with franchise sales up 5.4% like-for-like in the last 11 weeks. So we talked about this was a weak time frame for them. Now, if they can continue to have a very good year without any blips, this is going to look very, very impressive as well. And there was also a statement here from Shuk Jamal, the CEO and founder. He said, "We have continued with our steady store owning program to add the 205 Cakebox shops we had at the end of the year. As we approach the 250 target number of stores we set ourselves at our IPO almost 5 years ago to the day." So this is what we talked about. The stock IPO'd 5 years ago. When they IPO'd, they said, "Oh, we want to get to 250 stores. That's our target." They are very close to the 250 stores, which is really good. They've now said that they have now a new target of 400 new stores as well to the expansion. And I think this is 100%. Like, the amount of stores they can still open up is huge. There was only one Cakebox store in my city, and I reckon they could have at least 4. Now, recently they have opened up a new one. There's up to 2. I still think there could be 2 more in my city alone. And then I was listening to this interview here once again with the CEO, and he was saying Paul asked about international expansion, and Super Jamal was like, basically like, there's no need at the moment. Like, we only have like 1 store in Scotland, I think he said. And I think they've got none, I believe, in Northern Ireland. So you still think about the possibilities of expanding into Scotland, Northern Ireland, and then you talk about international expansion. There's still so much footprint for them to take up in the UK at the moment. But, you know, international expansion is potentially somewhere they go further down the line and move into more and more stores. They also said the pipeline of potential franchisees remains strong, with 47 deposits held at the end of the year, which is very good. And also there was this explanation. Okay, so they took last year, we also took a lease on a 27,000 square foot warehouse in Enfield, which I believe is their biggest one they've got at the moment. It actually says further down in the report, so you can go check that out. This warehouse has allowed us to remodel our Enfield depot into a state-of-the-art facility with bulk stock storage in the new warehouse, and then distribute it to our other depots. Having stock all in one place allows us to control stock more efficiently. This is probably why we're seeing the gross margins expansion as well. So yeah, this is great because it's a one-off expansion, and then obviously it will help them more and more as they continue to grow, especially if they're going to expand the stores up to 450. And that's also what we saw them do a while ago, where they bought a new fleet of vans. It's really important to keep investing into the company, so I'm happy with them to do this because it suggests that they're making the room for the growth that they're planning to do. And overall, look at this company now. Basically the same levels as it was when it IPO'd, 11 times earnings, 5% dividend yield. And if we just have a quick look at the growth, obviously fantastic growth, should continue to grow at really good rates. You can see here the growth at the moment is expected from an analyst point of view over 10% revenue growth. I've only got 4% down. I mean, 10% would absolutely be crazy. Financial health wise, once again, very clean on the balance sheet. They've only got 7% debt to equity, which is obviously really strong. They sit on 7.4 million in cash, obviously really healthy cash balance for a 56 million market cap company. Dividend yield, like we said, that probably get hiked up going forward. You can see here at the moment, analysts are expecting that to be a 6.4% dividend yield with the hike up that's currently going on at the moment. And then also you have insiders that have been buying up the shares in this £1.22, £1.39 range, which obviously gives you even more confidence as well. It's just absolutely fantastic. And I look at this company, how it's valued, and I'm like, this is valued at something like a Marks and Spencer's. Marks and Spencer's that's 10 times earnings. And you look at Marks and Spencer's and you look at their performance, and it's a company that's struggled. Basically, there's, apart from the last kind of year, there's not really been growth. Profit's been a bit poor really, and profit should continue to be poor for them, and potentially they have a couple percentage revenue growth, but it's not an attractive business. It's not Cakebox. It's not Cakebox where you're seeing 5% revenue growth, and analysts are even expecting double digit, and I've got lower targets than that. But even then, to outperform, the likes of Marks and Spencer's, profitability, no issue, that's growing, very good, so much better profit margins as well. Dividend yield, obviously didn't pay a dividend, has just gone back to paying dividend, 2.9% dividend yield is forecast, still nowhere near the levels of Cakebox's 5.56% dividend yield, and obviously, Cakebox will increase that a lot faster because they're generating so much more profitability as well. So the dividend is double and will increase a lot more than Marks and Spencer's. You look at the financial health of the business. With Marks and Spencer's, it's not even a stronger balance sheet. There's a lot more debt on there. And you got a company like Marks and Spencer's, for example, and then you got likes of Cakebox. It's, they're kind of nearly trading down the same times earnings, and there's just no competition. They're in different leagues. Marks and Spencer's is down here and Cakebox is up here. You're getting more growth, more profit margins. You're getting same valuation, higher dividend yield, will increase the dividend more. And it's just like, it doesn't make sense that Cakebox is at these sort of levels at all. So I think this is, a fantastic company that's been doing really well, and I still look at this and I just can't believe it sits below the £2 mark, because it's been absolutely smashing it at the moment, and smashed it so much since its IPO as well, and there's just no reflection there. So anyway, hope you enjoyed the video. See you in a bit.